When thinking about which organizational form to choose, there are a few factors that will affect your decision. When trying to decide what form of organization you want to start, there are a lot of different things you have to take into consideration. A lot of sole proprietorships are started because the initial costs are quite low. So the first thing you have to think about is initial organization requirements and costs. The costs tend to increase with partnerships and corporations. Then there's the liability of the owners. There's unlimited liability with sole proprietorships and partnerships versus corporations. Then you have to look at the continuity of the business. Corporations offer continuity. With sole proprietorships and partnerships, when members disappear, so do the businesses. Also, you want to look at the transferability of ownership. Ownership is most easily transferred in corporations. Management control is also a big issue. Sole proprietors have absolute control. Partnership control is based on voting, and corporations are controlled by stockholder voting, corporate officers, and boards. And then finally, you need to look at the attractiveness for raising capital. Corporations have the biggest advantage because ownership is easily transferable. Banks and investors may also feel that corporations are more likely to have a solid talent pool at the core of their foundation and more resources to pull from. Now let's do a quick recap comparing the basic legal forms of organization. Sole proprietorships are usually really cheap and easy to start. There's minimum requirements, usually no registration or filing fee, but there's unlimited liability, and then the business is dissolved upon the proprietor's death. With the general partnership, once again, there's minimum requirements. There's usually no registration or filing fee, but it does require usually a written partnership agreement, or at least you should have one. It's not legally required, but strongly suggested. Once again, there's unlimited liability for the partners. And as far as continuity, unless the partnership agreement specifies differently, the business is dissolved upon withdrawal or death of one partner. With the C corporation, it's the most expensive and greatest. It's the most expensive and has the greatest requirements to start. There are filing fees. You have to comply with state regulations. But there's limited liability for its members. And also there's the continuity of business. The business is usually unaffected by shareholder withdrawal or death. With the sole proprietorship, you can transfer ownership to someone else by selling the company name and all of its assets. You would have total management control and freedom. And as far as raising capital, you would be limited to your personal resources, because sometimes getting funding as a sole proprietor can be very difficult. And also, when you're taxed, your income is taxed, is your personal income. With a general partnership, to transfer ownership, this requires the consent of all the partners. When it comes to management control, the majority vote is required. All partners typically have to agree for decisions to move forward. For raising capital, once again, you're limited to your partners and your ability to contribute capital, and your income is taxed as personal income, just like a sole proprietorship would be. With a C corporation, and thinking about transferability, it's easily transferable by transferring shares of stock. As far as management control, shareholders have final control, but usually a board of directors controls company policies. Corporations are usually the most attractive form of organization when it comes to raising capital. Banks are the most likely to lend to these types of organizations. And when it comes to taxes, corporations' income tax and the stockholder is taxed if and when dividends are received. Many people make their decision on which type of business to form based on how they'll be taxed by the government. A sole proprietorship is officially defined as self-employed persons who are taxed on their business incomes at tax rates set for individuals. This is the end of Part 3 for Chapter 8. Please proceed to Part 4.